before I introduce the panel here, I do want to read the classic disclaimer that you probably have all been too familiar with. The content presented today is not directed to any investors or potential investors and does not constitute an offer to sell or a solicitation of an offer to buy any securities. All right, so with that being said, I'd like to introduce the panel here for everybody. Maybe we can start with you, Gil.
Hi, I'm Gil Rosen. I'm with the blockchain builders firm. I also run the Stanford Blockchain Accelerator. And I'm excited about the blockchain space and what it enables and what it can power, hopefully in the next decade to come. Before that, I started a couple of companies in the distributed compute space, had an exit, and have been investing for the last 4 years across a range of industries.
Amazing. Paolo?
Hi, Mike. Thanks for having me. My name is Paolo Guida. I am a partner, head of investments at Blockchain Valley Venture. It's an early stage VC out of Switzerland. We've been investing in enterprise blockchain applications mostly. As a background, I'm Italian. I've been doing several things, consulting, investment banking, and I've been a founder twice, a good and a bad one. So looking forward to the discussion today.
Yes, I'm super excited to speak with both of you, especially given all the recent events and everything like that. So, maybe we can start with you, Paolo. Like, what inspired you to launch a VC firm, and especially one that's focused on blockchain?
Well, first of all, I think the idea of the potential of the technology. I mean, you have a lot of monopolies today, especially in big tech. And the idea about distributed computing is really that you can replace the middleman and you can put power back to people and back to the users. So I think that is something which still holds a lot of promise, although the early days have been not necessarily 100% in line with the original expectations. So I think that's one point. The other point is like the promise of decentralized behavior and incentives, which shall be in a position to drive innovation across many different sectors, like, for example, finance, like social media, like gaming, like music, and so on. So I think the application of blockchain can really be across industries for multiple purposes.
Gil, what are your thoughts?
Very aligned. I think of blockchain less as kind of the Bitcoin, or less as even just the idea of decentralization, but really more of this concept of shared technology platforms. Until the last decade, when blockchain technology kind of evolved, any application or infrastructure in the technology space was always owned and managed by a single party. And that's why the databases of our banks are in these closed wall gardens, whether it's banks, whether it's Netflix in the gaming world, whether it's healthcare. So this idea of multiple parties being able to share a common technology interface, a common application, and coordinate together is new. And really that enables these open protocols, similar to the boom that we saw on the internet when we connected all of these disparate kind of closed intranets of these different companies, and we created open protocols, and that created liquidity of information and a whole bunch of applications that were built on top of that. We're really just in the early stages in blockchain. And to me, it's this idea of multiple parties being able to collaborate, whether it's nations, whether it's individuals, whether it's organizations and consortiums. And I think that's going to empower revolution in every aspect of how we live our lives.
Yeah, super interesting, and we did talk, you did talk about kind of like the evolution a little bit, but I'd love to kind of, Gil, maybe you can start here. With regards to blockchain, right? It's come a long way. The opportunities seem to be really, starting to kind of come together here. Some real applications are being built. What are you like the most excited about specifically now, like in 2023? Like what is it? Because we talked a lot about its potential, but some of it is maybe now, some of it might be later. But I'd love to get your thoughts about 2023.
I mean, I think about this in kind of two blocks. One is, unfortunately, the technology itself is still really early. It's slow, it's expensive, it's not terribly performant, and you have a lot of correlations. If you're trying to run an application on Ethereum, the success of other applications running on Ethereum are now going to impact your cost of infrastructure. So there are a lot of challenges here. So I think part one is, okay, how do we overcome these challenges? And that's really on the infrastructure side. So it's more performant and scalable chains themselves. It's oracles bringing off-chain information on-chain. Really, it's dev tooling to allow people to actually build applications. The iPhone is popular because, and became popular because it was easy for anyone to develop applications on it and anyone to use it. So everything that's kind of tackling these challenges around usability, around development and infrastructure, to me, that's going to bring forward the technology to a place that non-blockchain specialists are able to actually build in this space within their sector. Now, that's not, terribly exciting for, I think, the rest of the world. I think for the rest of the world, the use cases that we're going to see in 2023 accelerate are the boring ones. It's like USDC for payments in emerging markets. It's access to larger marketplaces, again, in emerging markets where you don't have great centralized institutions and platforms for commodities, or for tracing your produce. So if you're a farmer and you want to sell abroad and you want to reach customers that are not in your immediate vicinity, it's challenging to do that. So I think these are some of the immediate ones, possibly in marketing as well, where now that the iPhone no longer allows you to track cookies, we're going to see permissioned tracking, right? So instead of people surreptitiously manipulating people, be it on social media or trying to follow you, there'll be like more direct and open relationships between brands themselves and users. And I think that's going to help in the short term drive adoption of these technologies.
Paolo, how are you thinking about 2023?
Well, 2023 is going to be a transition year. I think we have seen like the hype, we have seen the fall. Now it's a good time because I think that the tourist investors are kind of gone, and now the hype has moved into generative AI. So that basically means that finally there's enough, how can I say, time to go back to basics, to start to build and to take time. So I think investors that are in for the long run. They try to be a good partner, really, to help and back founders build something concrete, and we are with real applications. On the other side, investors don't feel the pressure, being forced to invest at crazy valuations and with impossible terms. So I think that's generally what one thing that is exciting for me, because I think we can do our job properly, focusing on the long run. In terms of applications, there is one particular that I am passionate about, which is like the convergence or not, we will see, about decentralized finance and centralized finance. So in other words, is how do you bring real world asset and how do you build real world use cases and applications for on the blockchain? For example, it can be remittances in certain markets. It can be synchronizations of different players across the value chain in vertical industries, in given markets, and so on. So I think that's something which is really interesting. The other point I think is around the improvement of the governance and the DAOs. There's been a lot of hype and a lot of topic. The problem is that users are not really engaged, because they do not participate in communities, they do not participate in voting, they do not really engage. So I think that has to change, probably by reversing the approach, rather than going on a technology angle and the crypto angle and explaining the beauties of the technology, is adapting the technology to existing communities. And if blockchain is the tool, then let it be.
And for everybody that just joined, we do want to make these highly interactive. I see there's 3 questions in the Q&A. Keep adding questions and upvote them, okay? We really want to get to your questions. I could go with these guys all day because this is super fascinating, but I'd really kind of want to make this for you. So make sure you add questions in the Q&A. If it's your first time on here, what usually happens is we get slammed with 20 questions in the last 5 minutes, and we often don't get to folks. So just throw them in the Q&A and I'll try to get to everyone's. Paolo, you mentioned generative AI, okay? How do you think that's going to affect, or is it affecting the crypto industry? What are your thoughts?
I think that, look, there is one big opportunity, which is clearly when you start to cross like different technologies, that's the moment where you really see innovation and disruption. So I think this is really the case. There is one problem though with AI, open AI, and the kind of, how can I say, the way the technology is being built, which is access to data is proprietary, is not open. And the amount of capital and computational power which is required to basically process those information and improve the models is so high that basically is affordable only to few organizations. OpenAI started as a no-profit organization. Now is starting to become also a for-profit organization, you know, with the Microsoft investment. So I think one big opportunity is how you do you make this data set available and accessible to people so that they can build models that are really, how can I say, for the benefit of humanity and not only for the benefit of the few.
Do you have any thoughts on the whole generative AI thing, Gil?
Many thoughts. I mean, the quick one is I want to echo something Paolo said in his last reply, which is a lot of the fluff and the hype has moved from blockchain to AI, which is a good thing because it means people in the blockchain space are focusing on real applications. And unless you're able to build a company that's able to generate revenue in some way or form in the next 2 years, you're not able to get funded right now. So that's kind of I guess, tangential point. I think the practical point on generative AI is we're not going to have one AI model, right? It's not like ChatGPT-4. We're going to have dozens of models from dozens of large companies. We're going to have dozens of LLMs from, you know, that are all purpose-built. You want LLMs to be specifically trained on specific data sets. So again, echoing Paolo's point, I think we're going to have more marketplaces for data sets, and people will be generating data sets that they allow for people to train on AI. I think also you're going to want to be able to prove that an AI model is leveraging a certain data set or was trained on a certain data set or prioritizing it, that it's actually running a model that it says it's running. And in fact, the more models we have and the more automation we have in general, the greater need we have for infrastructure, for digital infrastructure to allow these models to communicate with each other, to allow applications to communicate with each other. And the legacy model of API calls isn't necessarily going to be sufficient. So I see like blockchain is playing a huge role in serving as that digital infrastructure layer for applications to communicate with each other, for data lineage, for transparency. And I actually think it's going to drive huge adoption in the blockchain space and growth, but it's going to take a couple of years until we get there.
You know, quickly switching to a topic that I know is very dear to your heart, Gil, you know, is what are your thoughts about how blockchain technology can be like a force for good in the world in 2023? You know, I know this is kind of important to you, obviously to you too, Paolo, but especially for you, Gil.
I mean, I ran Head and Heart Capital, which was like a social impact focused fund for a number of years. And I first got into blockchain specifically because of the potential for social impact as a means of transparency, of open protocols, of tracking externalities. I think, unfortunately, the chase for capital and value drove much of the DeFi boom and a lot of the NFT, kind of social NFT boom, which was really driven by speculation and alternative means of fundraising, which was one application, which is now being heavily regulated. So I think with regulation being what it is right now, ICOs are not a thing. People are waiting until significantly later to launch tokens, if they're launching tokens at all. So I mean, I think now as the technology is improving, we're starting to see more applications for the real world. And that really is whether it's carbon exchanges and tracking externalities that way, whether it's again, payments in emerging markets and lending in emerging markets. I think ultimately blockchain is made for, it's technology for public policy, right? A lot of nations are looking at central bank digital currencies. I believe the Netherlands is looking at pensions on the blockchain. Sweden is looking at, again, a CBDC. Georgia has their land registry on the blockchain. So are we going to see this all in 2023? I still think we have a ways to go. I think in the payment side and the marketplaces side and the carbon capture and externality side we are, but really the value is in technology for people, for nations, for public policy. And that is my hope, and that's why I'm in this space in the first place.
Beautiful vision. Paolo, do you have any thoughts on crypto, blockchain as a force for good in the world?
I think has the potential. Then it's always down to the use of how people use it. I strongly believe that there is a potential for the adoption of right incentives to drive right behaviors and align according to a certain goal. Unfortunately, we have seen also some distortion in the early days, and driven by speculation, by greed, by also some things that frankly I think has worked against blockchain. So for example, the fact that you've seen a lot of the value, regardless of real adoption in user communities, driven by Bitcoin, and Bitcoin value basically means that Bitcoin is able to explain a lot of the upside and a lot of the downside of the industry. And so it's difficult to disentangle what is happening and the adoption rate for the good of blockchain, regardless of what is happening to Bitcoin. So I think that the problem or the opportunity, depending on how it will evolve, is that Bitcoin can be really driving and impacting adoption of blockchain and blockchain-enabled tools for the good and for the bad.
Anton has a pretty interesting question, and Anton, I'm going to kind of paraphrase this a little bit for the panel. So, what Anton is saying is like, look, these days, many projects are expressing some hesitation with regards to collaborating with US-based investors due to like the stringent compliance regulation. Any like thoughts, at least on a high level, on kind of how you should think about structuring like the legal operations and the jurisdiction for any sort of like blockchain operated fund to kind of maximize the opportunities? And I don't know, maybe we could start with you on this one, Gil.
So I'm a special case because I'm mostly investing in teams in the Valley and in the Stanford ecosystem and supporting those teams. So they're mostly US based, regardless, in which case it doesn't make as big a difference for me. But I think there's a separation between well, there's two parts to this. One is there's current state and future state. Current state, that's 100% right? There's a lot of regulatory uncertainty. It's starting to get clarified a lot now, but I think any project that's going to be that's going to be successful will end up having American users. And we've actually seen projects that launch outside of the US and try to not have any US relationship end up getting slapped with attention from the various regulatory bodies. So you can't really escape the US in many ways. I think one of the solutions is really to launch your token later, once you have more value and you've actually built a platform out, and then there's less chance of it being regulated as a security. Or yeah, you can try and launch it outside of the US completely. There are many funds that have like multiple structures, and kind of we've looked at that as well, but Paolo might have more insight into this, given he's I believe not based here. Yeah.
Yes. Before we go to you, Paolo, just one second. Gil, one of the things you've mentioned several times already is that many, if not most, of the most enduring kind of firms or founders in this space are basically postponing launching tokens anyway, right? Like until post product market fit. Can you just quickly elaborate on that? Because that's super important. And Paolo, I'd love to kind of get back to you on this since you're in Europe. So it's actually very relevant.
Yeah, so I think that the reasons to launch tokens have been twofold. One has been to raise money, which generally is often seen as a security, as well, and the other is for utility in whatever platform you have in one way or another. Now, if you're using it as a means of raising money and you're defining your tokenomics before you've actually built your platform and have users using your platform, you run into the risk of having the wrong people with tokens who have the wrong incentives, and their incentives are really speculation, as opposed to using your platform, right? So, and once you have your tokenomics defined, it's difficult to change those tokenomics at that point. So ultimately what happens is you become a speculative platform, and it's difficult for you to shift to whatever tokenomics you would want to have that's best for your users to have longevity and lasting value there. So the idea of delaying your token launch until you have something that's built that people are using, where you know who those users are and you can target it towards users that are using your platform for the right purposes, is in everyone's benefit. It's from a regulatory standpoint, but mostly from a business standpoint, where you're able to define your tokenomics once you know who your users are and the right incentives for them.
Paolo, thoughts?
Okay. Well, first, I would say that there is, I read recently, I think that there is a parallel which has been drawn between the early days of internet and the state of the regulation today. So in other words, even back in the 90s, US government was, how can I say, against an uncontrolled adoption and build up of the internet. So they wanted to have like their hands on and be in control of what was happening. I think that what we are seeing today is exactly the same. So think of Binance and Binance US and the regulators that are going after the founders, proving a lot of wrongdoings there. I think what this is doing is that the new wave of blockchain-based businesses will be likely built out of the US or starting from the US with a benevolent view and approval of the regulator within a framework which is much clearer than it is today. It is simply impossible, I think, to realistically to think that you can embrace a global technology or have like an embracement of a global technology everywhere without the US. That's simply not going to be. It's the most important market. And if you think about China, for example, which would be the alternative in terms of size, being still a not open society where many people now are scared to go, I think it goes back to square one. So there is a moment, which is probably this moment, where clarity will have to settle in. So there's going to be a little bit of uncertainty until the regulator has taken like a final view in terms of what is going regulation be. But then once that is adopted, I think it's going to be much clearer. Second thing I would like to say is that not always you need a token. You know, sometimes you also have like projects that are based on the blockchain, maybe on private and permission blockchain rather than necessarily on open blockchain, which have raised capital, are using capital as equity, for example, and they don't use tokens, but they are simply building a technology stack, which, for example, is monetizing as software as a service, direct enterprise, other ways of monetization. So I think not necessarily token is always needed when you have like a blockchain project. That said, there are some of the early days, I think, and early days projects which have proven wildly successful, not because they use the token, yes, also for that, but because they were really innovating in a given space, and there was an opportunity there. Blockchain was designed for that, and they have proven that blockchain could be a model. So, for example, Uniswap is just an example, just to quote one.
I'm going to paraphrase Violetta's question here. Can you quickly just talk about, at least on a high level, what a pre-seed company means for a Web3 one in 2023, and what a seed stage company means, and what that kind of looks like? Whatever you feel comfortable sharing, right? Whether it's valuations, whether it's just like metrics or whatever. Just I'd love to kind of hear this myself too, because it's a little different, in the space. Gil,
you want to go ahead?
Yeah, go, Paolo. Since you're unmuted, go for it. Go, Paolo.
Oh, okay. Well, I think it's very difficult to say. We are still seeing like seed companies with valuations which are through the roof, regardless of the fact that we are in 2023 post correction. And many times it's still pre-revenues. I think in truth there is how can I say, a bifurcation. Probably we see like US on one side where there's plenty of capital and there is plenty of talent, and there is very technical team who are building and innovating at infrastructure level and so on and so forth. And then Europe, which is a little bit more, I would say, probably less sophisticated or less developed, if you want. So in terms of valuation, I think it's really, depending on the sector, depending on the topics. We used to have like a lot of inbound opportunities in NFTs and gaming. I think that's gone, and so difficult to say. What we are looking at and the way we are looking at an early stage project is exactly the same as we look at the traditional tech. The only difference, I would say, is that how long is the founder and how long has the CTO been in blockchain and in crypto space, or are they really committed? Do they really believe in the potential of this technology, or they are simply tourists, you know, that are kind of using the surfing the wave, and then comes generative AI, they move to the next one.
There's a question here from Emil, you know, with so many L1s, DEXs, bridges, wallets, et cetera, where in the Web3 infrastructure tech stack do you see the next wave of innovation happening? Gil, maybe we start with you on this one.
Yeah, happy to take that one. I mean, I think it's every level of the tech stack, right? So it's right now, you're right. We have a lot of different, we have quite a number of chains, and many of those chains then have scalability challenges. So we have L2s, L3s to tackle both scalability as well as privacy and security. And then with the proliferation of chains, you then need cross-chain kind of messaging, bridging, etc. I think there's two parts to this, which is the first is each of these chains tend to have very specific capabilities. Some are optimized for performance, some are optimized for security, some are optimized for privacy. And those are going to have different needs, right? So that's kind of part one, which is why we see so many and why we're trying to see bridges kind of combining them in one way or another. The other is, are we targeting legacy users in the blockchain space, or are we targeting net new users? And those aren't necessarily the same. So if you're trying to be backwards compatible for NFTs because you're building something that's related to the gaming space or the social space or marketing space, and you need that backwards compatibility, then maybe you're working on a chain that's specific to you, but you want interoperability. And again, the name of the game of blockchain in general is open protocols and standards. So you want interoperability with all of these other legacy applications and people that are in the market. But if you're building something net new for a new industry, and maybe it's a consortium in the energy space or the supply chain space, you're potentially less concerned with old users and more concerned with, I think Paolo mentioned this as well, really building value where people don't know that there's a blockchain behind that. And we see this with chains that are object-oriented, like Sui, that leverage the Move language. So we're going to have different chains, and that means that we're going to need all of these different aspects of the tech stack to manage them and to develop on them and to combine them. I still think the main things that are missing here are ease of development and ease of use. And those are the two things that are going to be tacked on to either side to help abstract out many of these different chains you can deploy in multiple chains, etc.
There's a question here in the chat. I'm going to send this over to you, Paolo, because it's very relevant. Thoughts on like Web3 VC funds in Europe with regards to kind of jurisdiction and how they should think about that? Any kind of thoughts, advice? I know you spent a lot of time on this, and we spent a lot of time on it together.
Yes. Well, I think it depends on the size and depends on where your LPs are. I think it's the same old story as for incorporating any VC. First, if you are like a first-time manager or relatively new manager, make things simple. Don't go with an extra layer of complexity saying you're going to tokenize the VC fund and so on. Second point, I think simply if you are running a fund which is less than, say, 10-15 million euros, unfortunately, Europe is too expensive and it's difficult to sustain. So I think, for example, in our case, we ended up choosing Delaware just because it's much cheaper and it's much faster and can accommodate. That said, you may also have like other structure that you may explore. For example, securitizations set up in for example, even in Luxembourg, which may be catered for specific uses. But I'm happy to talk more about this separately if needed.
There's a question for both of you. Is there still a lot of like LP education that needs to happen to clarify like Web3, it being different from Bitcoin, crypto, DeFi? I don't know. What are you guys' thoughts on that?
Yes.
Okay.
I mean, Yes and no, right? It depends who you're going at, who you're approaching as LPs. So there's a lot of capital that's interested in the blockchain space in general that doesn't need education. There's a good amount of capital that was interested in blockchain, is it kind of been frustrated with the last couple of years and are uncertain now, and I think need education in terms of understanding that why is everything not decentralized? Why has it taken so long for us to even get to where we are and for the technology to be adopted? And then there are those that know very little about blockchain, and that's probably the majority. And whether or not you want to have them as LPs is a choice, because it does take more education, and that's more work. But I think we've come far enough that it's possible to educate someone if you want to.
I personally think that it really comes down to the geography where you're raising and where you also are operating. So probably US, especially certain parts of US like California, New York, Miami, probably are more sophisticated. There is more people who became rich by building and selling companies, and therefore moving to the next technology is a natural thing. And so blockchain is just one of the next technologies which are now driving conversation and innovation. In Europe, I would say, where, for example, government is much more central and is taking such a large part in terms of funding new managers, and think of pension funds, insurance companies, and so on. The institutional investors, those are people who, frankly, don't know much about the underlying technology. All what they care about is who you are, what you have done before, what's your track record, and so. Yes, some explanation, but just a light explanation, and then you can sell the dream, you can sell the vision. I think it's usually more or less the same thing. If you were to raise today a fund focused on quantum or like generative AI, or it would be a marketing pitch, and you need to be able to articulate why you are the right person for that product and why you're going to make work better than others.
Interesting question from Janine. What do you think is lacking for mass adoption in the Web3 products right now? Any thoughts? I'm sure you have a lot of opinions on this.
Gil, you want to go first?
Yeah, sure. I mean, I touched on this a little bit earlier. Until my grandmother is able to use a Web3 application, we're not going to have mass adoption, right? And that's a lot of it is this user experience where you shouldn't care that something is a token, an NFT, or on the blockchain. It should just be a means of interacting with other people and collaborating and getting value from that. So I think the technologies that we're seeing that are trying to resolve this are things around account abstraction, where you can use other logins or multiple logins to identify yourself, where you don't need a wallet specifically, or where the wallet is embedded into an application. Like, that's part one. Another is for wallets to be more functional and more useful, rather than just a place to store these things called NFTs, which, unless you're a blockchain nerd, you don't really care about. So that's one part, and the other is developer experience. If someone wants to build an application, I don't know, in the housing sector or in the gaming sector, they shouldn't have to be a blockchain engineer. They should be able to just be a developer. And once we can simplify development, and many, again, of the newer languages that are more object-oriented are allowing us to do that, and making it easy to define security, to define objects, and to build and develop in general. Once it's easy enough to build it and easy enough to use, we'll have a lot more applications.
Paolo?
Well, if I can build on that, I think I fully agree. I think blockchain has been built especially by visionaries and by idealists at the very beginning. So it's people who would dream to change the world, and we're coming from anarchic angle, if you want. They were not people that were trying to maximize user experience or like adoption across business users. I think if you reverse the paradigm for a moment, I think it would be much easier, for example, having existing companies with large million users of users bases of in the millions, embracing or pushing through, for example, wallet adoption, it would be, something that would probably happen in the blink of an eye. Some people are talking about 2.5 rather than Web 3.0. Now, is that going to be truly native and aligned with the ideas of blockchain? Probably not, but that would push definitely adoption. I think the other thing is a little bit of disconnect when it comes to what technology can do and what regulations and laws allows you to do. For example, taking as an example Italy. Italy has a system which is public identity, and public digital identity is regulated by the states. It tells you which are the software, which are the tools that you need to use. It's not you possibly using your iPhone or your phone and deciding your own application that you own, you store, and you can use your credentials to identify yourself across all the other digital services through the internet. So that makes a huge difference. What is accepted and what is not accepted.
Everyone, we got roughly about 20 minutes left. There's 14 questions in the Q&A. I'm going to try to get through as many of them as I can. Before adding a question, just look at the list and see if you can upvote them with like a little thumbs up. We would really appreciate it. That way we can really focus on the questions that are most important to you. There's an interesting question here from Violetta, is like, thoughts on kind of the recent situation with regards to like banks especially in the United States. How do you think if that will affect crypto regulation, if at all?
Happy to jump in a little, and then would love Paolo's views. So I think there's two parts to this again. I think on the one hand, we've seen that there's a need perhaps for self-custody or shared custody of assets, and that fractional reserve banking adds a lot of risk to it. So I think there's a greater interest perhaps in having USDC-based accounts or the like. So the need for blockchain technology, I think, has been shown for many, even though USDC depegged briefly. I think the reality is that part of the shutting of say Signature Bank and others is there's a real fear of blockchain or aversion to blockchain-based technologies, and the current regulatory environment isn't very friendly. In fact, I think that the latest approaches have even been saying that I think both the SEC and the different regulatory bodies have been trying to regulate the same thing, saying that if one is saying that Ethereum is a commodity, the other is saying that it's a security, and this is something that we thought was relatively settled. So I think this is going to end up this is ending up in the courts, and the courts will decide in the next couple of years, and that'll help give clarity and will drive everything forward. But for now, it's just going to stay tenuous.
Okay, if you want my opinion here, I think on one side there's still the need for central banks or like the big retail institutions. They've been around for centuries. There is a reason why they perform certain functions, and they're regulated, and they deserve the trust, or shall deserve the trust of the people. I think if you go in the direction of full digital currencies regulated by the central bank, you don't need banks anymore. You as a person could have like your own personal account straight with a Bank of Central European Bank or the Bank of England or whatever. So you don't need banks anymore. I think this is going to be a tectonic shift, and politicians are scared, and we are not ready with that. That said, I think the adoption for self-custody and so on is clearly more prominent in certain geographies and certain markets. If you think about Turkey, Argentina, and so on, where there is a turbulent economy, high inflation, and so on, historically, that's been an avenue to basically put some of your money in a safe place and far away from the regulators, from the governments and the politicians. On the other side, what we are seeing is banks started later in the adoption of crypto, but they are not stopping. They are actually going ahead and starting to and continue to deploy and to build. Think about Fidelity. Think about many of these players, JP Morgan, PayPal. They have not stopped. I think What probably will be a game changer is, if some of the big guys, like think of Apple, for example, all of a sudden decide to embark in blockchain. Now, again, this is like against what the philosophy of the blockchain would be. But, if you make a wallet available on iPhone, who can compete with that?
There's basically two questions. I'm going to paraphrase them. One's like around thoughts around the safe versus the SAFT and like kind of investing and how to think about structuring your fund to do that. And the other one's like your personal preference. How do you think about it? Do you equity or tokens or both? I don't know. Maybe we can just start with regards to like the equity versus tokens and stuff like that. Maybe we can start there. Gil, what are your thoughts on that? And you're a VC, so obviously equity is important.
Yeah, along the lines of kind of the comment earlier around delaying token launches, I think the challenge with the SAFT is that you kind of want to, like, now you're investing in tokens, and that kind of starts to allocate tokens. Who do you allocate tokens, and what is that? But it also means that tokens are very clearly a security, because you're investing in something that you expect to appreciate. Personally, we prefer safes, and we're only looking at safes right now with generally token conversion letters. And it's just an easier way of, instead of expecting a venture in its early days, in a pre-seed or seed phase, to have everything figured out, you can kind of punt that until later. And we're seeing a lot more of that, and I think that's the optimal route, but I'm sure others feel differently.
Paolo, do you have thoughts?
Well, I think both could work. Tokens clearly have or shall have the benefit of accelerated liquidity, and for an investor being able to prove that you can basically generate returns much faster, much quicker is very important. We did a couple of years ago, 21, research on DeFi, and basically, something which came out is that the average team was composed by only 10-15 people. It had raised much less capital. It was much more capital efficient, and it went to let's call it an IPO or a token generation event at an average valuation of 50 million. And the returns at that point were many ways much higher than the traditional 3x that a good VC was promising to return to investors. Now that clearly has changed and has come down. I think what really matters is how control freak you are or you are not. So in other words, do you trust the founders or do you want to control the founders? Do you want to control the project? So if you really want to be focused on that, then not only equity and tokens matter, but also what is the share and how the governance is structured, and what is the say that you have in the project. On average, what I can say is that early days, what we have seen and what we were trying to get, for example, was investing into equity, but also getting the additional benefit of being allocated tokens if the company was then issuing tokens at a certain point. Although that clearly comes with potential conflicts of interest, because it's the same project depending on how you see. Is it maximizing equity value, or is it maximizing token value? So
James has a pretty interesting question. Paolo, you mentioned Apple adopting blockchain potentially. What incentive do institutions with major centralized control, i.e. Apple, have to adopt decentralized like ecosystems?
True. It's clear why blockchain enthusiast or like blockchain ambassador would be dreaming of accessing, say, an Apple user base. Is not clear what's the benefit on the other way around. So I think the question is super legitimate. So I'm not going to be able to provide like a full answer to that. I think if Apple was to be trusted as the digital identity provider, it would be something that definitely has a lot of value and would unlock access to many more services that Apple at the moment is only touching on a tangential angle.
On a high level, maybe you can take this one, Gil. What are your thoughts on VCs trying to do like a DAO, VC, or a tokenized venture?
Right. I don't think blockchain makes anything easier. So I think if you're trying to start a fund as a DAO, it's challenging. And if you're trying to make investments through a DAO, it's challenging. And we've seen successful ones. There's Orange DAO, there's Alliance DAO. I think if you have an existing community and if you have an existing structure that's been built already, and then you want to decentralize it through a DAO to better engage your community for deal flow, for support, that certainly makes sense. And those have been successful models. I think if you start out as such, it's just hard to, again, like we were saying about product market fit earlier, right? It's hard to build something as a community. You need to build it first and ensure you have the right people, the right community, and the right alignment, and then you can decentralize it afterwards.
Interesting question from Krish. What ZK tech or end user facing like applications excite you the most? Paolo, any thoughts on this?
Again, I think future of finance is an area that particularly for me is something which is close to my heart, but probably because I come a little bit more from a traditional background, and then I found myself a little bit entrenched into this. So I still dream of how can I say, a moment where, for example, you can use, for example, blockchain access to capital and tools to make, for example, loans to people who deserve. Think about, for example, the micro lending in certain countries. It's something that potentially could be really facilitated by blockchain because it should bring transparency and make traceability and so on. I mean, as always happened, not always, right? Just to give an example, we had a company in the portfolio that was using originally blockchain to make personal data usable by the many, and paying back the users every time that a corporate user was using for this data. What happened? It's really funny because no one cared about blockchain anymore, so they basically had to unplug the blockchain, and now this company is working with Facebook, is working with Google, is working with BBC, providing an innovative solution which has nothing to do with the original idea. So things do not always go as you plan.
Interesting question about like how you think about like engaging with a company. At what point do you decide to kind of like start getting serious about making like an investment decision, I guess, in a Web3 company? Is there like some milestones or at some point in the life cycle, any sort of context that you can give to any sort of like founder in the audience? Gil, maybe we can start with you since you have an accelerator. So
yeah, I mean, I like starting early and building relationships with the teams themselves. I mean, currently there's like broadly two types of things that we're looking at in this market, which is very much a bear market and is a more challenging market. One is, do you have real innovation? And that's probably the bulk, like 70-80% of the teams that we look at. Is it research-based? Is there something that's actually new? Is this something you could write a white paper on that people will use and respect? That's part one. Or part two is, if you're going to build a real-world application, do you have significant sector expertise? Like if you're building a payments company for like B2B payments, have you worked in that space for X number of years and know the parties and players and have a competitive advantage and go to market? So if those are your starting points, we like to talk to companies kind of at that stage, and then see as they progress. I mean, the hardest thing right now is go to market, right? So figuring out how you're actually want to get customers, who those first customers should be. So once you have kind of this innovative idea or your sector expertise, really starting to validate that, map that out, and build out. I think like that's the point where I start to get a lot more confidence in teams.
Yes, personally, if I can pick on that, I think what matters is what is the big idea behind. So why you have a right to exist in the world, what is the innovation that you're bringing here, and also what is your ability of executing on that vision. So, I've been a founder like many others, and I succeeded and failed. And that helps me read on the other side, what people are telling and what their people are not telling. So personally, I think what we like is like to track, be able to track, if possible, like the progress of a team a little bit over time. So it's not something which you meet and the day after you have already decided that you're going to write a check, unless there are some very exceptional cases. So it's kind of a dating thing. It's like at least probably 3 to 6 months. At least in Europe, I think you still can go with 3 to 6 months. I don't know if the US now has changed a lot, but I think 3 to 6 months. Teams that have like vertical expertise in a given sector or product, and ability to articulate a story, explain why they deserve it, but also convince not only you but also others. So one thing that we like very much is doing investment jointly with others, so we can lead, we can follow, but we want to make sure that the founders have enough runaway to hit the next milestones. So it's important that they're just not able to cover a quarter of what is needed for covering the next 12 or 18 months. It's either all or nothing, and I think that's a little bit what is making very disciplined approach to investing possible.
All right. So the last question that we always like to ask in these kinds of webinars and things like that is, knowing what you know now, what advice would you give yourself if you had to start building your firm from the ground up today? And, maybe we can start with you on this one, Gil, and then we can end with you, Paolo.
Yeah, I think you really have to understand where you're adding value to teams and how you're able to support teams. Because unless you're coming in with a huge name and a huge background, you had an exit because you were this founder of Coinbase. Brian Armstrong started a fund tomorrow, it'd be easy for him. Like understanding where you add value is critical, because that's going to be the crux of where you get your deal flow and more importantly, where you get your allocation, right? People will take your money because you support them and they want you on their cap table, especially for the best teams and the best ventures. They're going to have their pick of the litter of funds. So I think like that's been tremendously helpful for me as I shifted a lot more focus to teams where I'm able to support them a lot more and they value my support. That's been able to ensure that I have allocation into the very best teams that I want to be supporting, that are going to have like other top funds, and I can play well with them as well.
Paolo?
Yeah, I tend to agree. You need to find your own right to exist in the market. So not only the founders have to do it, you also have to do it yourself. And so you need to be able to explain why you and why you're better than others. So I think go thematic. So pick your battles, decide where you want to play, and stick to that, because it's a journey. You need to build a reputation. Reputation comes only in the long run. So you need to be consistent in organizing events, talking to people, publishing stuff, and so on and so forth. The other thing is, again, I think personally, I could succeed, I could fail as an investor. I always want to be able to justify why I made certain investments. And so I only touch things that I understand, things that I'm passionate about, and things that I would probably use also as a client or as a user. So those are some of the criteria that on average, I try to apply to myself when deciding if I want to invest or like to be supporting someone.
Amazing. This was epic. I learned so much from both of you. Thank you so much for taking the time out of your busy schedule to do this. Everyone, if you're interested in launching a firm, go to govclab.com and you can apply. We actually have a crypto specific program we're launching here, if that's something of interest. If you're an LP, we have an entire series dedicated for you specifically to learn about venture capital and how to kind of best allocate to new and emerging managers. And if so, please subscribe to that series. We'll be following up with an email. Thank you, everybody. Hope this is helpful. Talk to you soon. We'll see you on the next one. Bye-bye.
Thanks so much, Mike. Appreciate it. Thanks, Paolo.
Thanks to you. Bye.